Hi, Kyle here for Goeman Agency. Today I want to talk about your insurance score, not your credit score, your insurance score. And what I'd like to show you is how much a insurance score actually affects you. Now, most people think that they don't have an insurance score. Most people haven't even heard of what an insurance score is. Just as an example, I'll show you a company here that most people come in and they don't understand why their neighbor rate is completely different than their other rate. I had a guy that actually came in today with the same vehicle I drive, and his rate was double what my rate is. And I showed him that, and he said, how can that be? And I said, well, let's look at this particular company, and let's look at the rating. Well, the thing is, my insurance score rating is a 1A for this company. So for this company, my insurance score is between 892 and 997. So for every dollar, I pay 68 cents on that dollar. Well, this particular individual had no claims, no violations, but his insurance score was between 650 and 703. So he was at a 1F. And you might be thinking, well, what does an insurance score mean? What is that? What does that factor? I'd like to show you the best example I have, or the one that I like to use the most, is basically what Progressive says. I'll put the link below in this video so you can see what they're saying. But they're looking at what an insurance score is. So what is an insurance score? Well, I'll just read this to you. An insurance score is a score calculated from information on your credit report. Credit information is very predictive of future accidents and insurance claims, which is why, in this case, Progressive and most insurers use the information to help develop more accurate rates. Each insurer has its own method of evaluating the credit information. At Progressive, we provide our method of analyzing the following data from people we have insured. So they use accident and insurance claim histories, which pretty much every insurance company does, and they also use your credit report information. The result of the analysis tells us what credit information will help us predict how likely you are to have a future accident or insurance claim. We assign a value to each predictive credit factor and add the values to calculate your insurance score. The lower your score with us, the better. And that's the same thing these other companies are doing. I just like the way that Progressive basically states that. So our insurance score is the same as credit scores. Like I said before, they are not, but they do use the same information. What credit factors can affect an insurance score? Well, a number of things. As you can see, they have a list here. The length of your established credit, late payments. They have many things. Like I said, I'll attach the link here so you can go through it. But for most people, if you're like in my case, I'm paying 68 cents on the dollar just because of my credit score. I mean, you factor in small claims and stuff too. That's often why when you see these low deductibles, a $50 deductible, as soon as you turn that claim in, that also affects your insurance score. So it actually has a negative impact on you. But you give up that control when you pay for a low deductible. A higher deductible, you stay in control. But then again, you have to pay those claims as well. So just like to educate you, put this video out here, and like I said, I'll attach the links and comment below and subscribe.